Hello, everyone. It's Thursday. It's July 7th, it's 2016. And this week at our Thursday Talk About Robot Trading webinar, we're going to talk about something that really excites me. This is really exciting to me. I've spent so much time researching this in the past week or so. And honestly, I've spent the last 6 years researching this topic. And the reason this topic is so incredibly important to me is this is kind of where I began. This is, as I told the story yesterday in the blog post, and make sure you catch that if possible at the YouTube channel, blog, whatever. But this is how really I got my trading stake. It's really the reason I'm here. I was a discretionary trader. I traded to fair value, and we made a bunch of money. I mean, it was literally almost $1,000 a day. Now, that's across two accounts, but still, I mean, we would wake up, my girlfriend and I would wake up, we'd set up the trades, and she'd text me or email me in a couple hours saying, oh, another 1,000. I mean, it was amazing. It was the most amazing thing ever. For 3 months, we made a bunch of money. We made the trading stake. We still have all that money today. Didn't blow out any accounts. So this is where I came from. This was the most consistent way I've ever made money. Well, that begs the question, why aren't I doing it? That was discretionary. Why am I trading robots? Because it turns out that we were a little too greedy, a little too aggressive, and we went through a real bad experience. So I got into a ton of research on the system that we were trading, and we were betting too big. And in about 6 months, we would have blown out everything, would have lost it all, because their trade was coming around the corner that we may or may not have taken, may or may not have managed poorly, and may or may not have lost the account. So that was the end of that. I haven't traded that way since until now. So you can see I'm very passionate about this particular topic because, let me say it again, it was the most consistent way I've ever made money. I mean, I've done it. I can show you the account statements. I've shared it with Rob. It was a real thing. 50 grand in 3 months. It was about 50% gain on the accounts too. I wasn't trading small accounts with it. So here we are. Are we back full circle? Maybe. I really feel like this is the beginning of this topic, but here we are. All right, let's go super quick review. This is really important because I've gotten a lot of emails on this topic, and it's so important that this part is clear. All right, we're talking about winning 100% of the time. That's what we're talking about. We're talking about every time we take a trade, we win. All right, now somebody emails you or you go on a marketing website or whatever, and they say, we win 100% of the time, it's probably a scam. All right, I could easily fudge the numbers and show you a 100% system. I mean, that wouldn't even take me 10 minutes, right? Just give you a little sliver of data, show you 100%, make you a sales pitch, and probably take your money. And I knew darn well that wasn't going to work. It's going to blow out your account, all right? I hear you, right? It's just common sense if someone tells you to win, they win 100% of the time, right? But understand this. Those are the marketers. Those are the charlatans. 100% trading is not a scam. The most fundamental, most boring, most wise investor that any of us have ever known is Warren Buffett. And guess what Warren Buffett does, right? He's a 100% trader, right? Basically, what does he say? His favorite holding period is forever, right? I said it yesterday and I'll say it again. Do you get what that means? He waits for something to be mispriced and he holds it forever. Now, what in the Sam Hill would be the reason to hold something forever? Well, that would be so it's profitable, right? His favorite holding period is forever, A, to let it become profitable, and B, to let it become really profitable. Warren Buffett, every time he picks a trade, right, he wants a margin of safety. What does that mean, everybody? It means every trade he takes is profitable. That's what his expectation is. It's either profitable tomorrow, profitable next week, or 10 years from now. He does not care. But Warren Buffett is a 100% trader, right? For more on that, check yesterday. And yesterday I talked about long-term capital management, the most successful, most famous hedge fund ever, and maybe you've never even heard of it. Nobel Award winners for economics working on it, the smartest people in economics and trading all together under one roof. They traded billions, and for 3 years, they never lost, ever. Now, what did they do? They got greedy, right? They got really greedy. Read it. Read the long-term capital management books. And they bet too big, and they lost, about $4 billion in 6 weeks, right? But it wasn't necessarily the system. If they had traded that at a reasonable size, guess what? All their trades came back in the end. And it took a long time, but they all came back in the end. Like Buffett, this particular style of trading was wait for something extreme to happen and then just wait it out. Okay? That's totally forgotten. It's just like a long-term capital. They blew up everything. Yes, they did. They were idiots, and they traded too high. But their system was not idiots, right? They were 100% trading system users, I guess you could say, right? So there's your background. It's very, very, very important to understand the philosophy. This is just basic common sense. If you're a long-term trader, or even a short-term trader, 100% system with prudence and common sense and philosophy is not a fake thing. Fake numbers that are data mined to try to make you buy something are, right? And you should be able to know the difference if they're clear enough and give you enough reasons. Okay. Besides the philosophy, let's talk specifically about the siren song of 100% trading, right? Why, since 2010, I've pretty much been thinking about this nonstop, sometimes in the back of my mind, sometimes in the front of my mind, all right? Why is 100% trading so attractive? Well, there's some obvious reasons, but here are the reasons for me. There's just no doubt that trading with stop losses is frustrating, right? Douglas is frustrated, right? Douglas, you've emailed me a couple times, right? I'm frustrated. I trade, how many? 1, 2, 3 portfolios right now. I'll talk about that later, all with stop losses, and it's frustrating, right? The Hornet, which is my day trading portfolio, will sometimes go through periods where it stops out all the time. You'll get into a trade, it'll go positive, it'll stop out, right? But it's the stopping out that actually is the secret to that portfolio, okay? It has to stop out so your losses are maintained and so that the trade sizes can be managed and so that it works long term. One stop loss that's ignored in, say, a stop portfolio like the Hornet will throw everything off, and there's almost no coming back from that if it goes wrong, okay? So stop losses have their place, right? They do. Absolutely they do. I trade them with my own money, but it really, really stinks in a period like this. You take Brexit. I know personally I didn't trade during Brexit. Guess what happened during Brexit? Winner, 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 winner. Took none of them. Turned it on after Brexit. Loser, 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 right? Didn't get any of the winners, getting plenty of the losers. But again, that's part of it. I'm not worried about it. I'm not upset about it. It just sucks rotten eggs, and I get it. I totally understand that. But that's why 100% trading is so attractive, right? In that glory 3-month period in 2010, this never happened. You didn't go through periods where it stops out and the money goes in your bank account. Everything came back, right? But that sucky, rotten egg feeling obviously can be remedied by 100%. I mean, it says right there on the screen, if your portfolio never loses, you don't go through this. I hate stop losses, right? If you get into trouble, which you will, then you just wait for it, right? It is a very attractive thing. Oh, trade went bad. That's all right. It's going to work out in the end, and you just move on, right? Those two reasons are huge. They're a huge reason why no one wants to use stop losses. It's hard to be a part of big winning streaks when you have stop losses. Do you understand that? If you have stop losses, you're never going to win 1,000,000 trades in a row. You're never going to go through a 3-month period where you don't lose a trade. Never, 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 never. It's never going to happen. Something is always going to spin you out. You're always going to get clipped. If you have a stop loss, you're going to get in the middle of a trade and it's going to stop out. I've seen it hundreds, if not thousands of times, right? You're never going to have the big winning streak. You're going to have consistency, but never a big winning streak. Trading for 100% allows you to ride really good markets and win, 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 right? Win all the time, right? That is a part of the siren song of 100% trading. And of course, and there are other reasons, but, right, you have a stop loss, the robot hits a stop loss, and guess what happens 4 hours later? It wins. I understand that. Being a stop loss trader, it doesn't bother me, but I totally get it. I totally, totally get it. So that aside, we know that 100% trading exists. We know what's so attractive about it. Let's get into the philosophy and let's get into the nuts and bolts. I said these quotes yesterday, and I think they're hilarious and wise. John Maynard Keynes once famously said, the market can remain irrational longer than you can remain solvent. And this is actually the quote that was describing long-term capital management. In the book, this is the quote they used to describe their situation. Long-term capital management bet too big, markets went irrational, and they lost all their money. If they hadn't gone in too big, the markets could have remained irrational, but they still could have remained solvent, right? And that's why I love the quote by my friend Rob Booker, of course, who said, I can remain solvent longer than the markets can remain irrational, right? Which means, what does that really, really mean? I mean, that's the secret. What Rob said, he was making a funny joke, but he's also giving you the secret. And that is, if you bet prudently and go for 100%, you can remain solvent. The market won't take all your money before it becomes rational again, right? The markets will go from irrational to rational. They will. It's a universal truth. Will you have money when they do? That's what this is. Do you understand? That's what this is all about. In 2010, I would not have any money left when the markets became irrational. My betting system was way off. But I think maybe we've solved that. All right, let's talk about the essentials of a 100% winning system, right? We've talked about philosophy. We talked about why we want it. All right. I've gotten a lot of emails on this, so please email me. Ask me questions now at the end of the webinar, whatever you need to do. Keep in mind, when I say 100% winning system, I mean that not every trade wins, right? So it's actually, you could say, well, it's not a 100% system. Fine, it's not. When you are trading for 100% wins, not every trade will win. In fact, if you take 4 trades, 3 of them might be losers and 1 of them's a winner. But, if you treat it as a project, the first trade you get in is just a test, and then you have follow-up trades, and as a whole project, you can make that project a 100% winner. You absolutely can. That's just a fact of life, right? Warren Buffett gets in, first trade. He buys it at 50% off and waits. If it goes down more, he buys more. That first trade may end up not being profitable in the long term. Second trade is wildly profitable. Thus, the project is 100%, right? So that's what we're talking about. Not every trade is 100%, every series of trades. And that is hugely important. If you expect every trade to be a winner, or if anyone says that, then they're lying. But if you talk about a project, no, that's just common sense, all right? So understand that. Second, if you're going to go for something like this, you have to be patient. You have to, you have to wait. Do you understand? You have to wait. You can't just enter the market and then see what happens and then add on and try to get out of trouble. I could probably do a robot and I may end up eating my words, but to date, right now, you have to wait. I know for a fact from my research and having trading it that if you wait for extremes, you got a chance. You have to wait for something very specific. And that's hard for some people. Right? It's hard for some people to be patient, right, when you're waiting for the trade, okay? Third of all, excuse me. Well, let me give an example. It says there on the screen. If you're like Warren Buffett, if you wait for something to be far, far away from fair value, which is what I did back in 2010, if you wait for something to be far, far away from trade value or fair value, then you can trade that. And if it goes down, for example, on a long trade, then you buy it back. All right, so that's just an example. You can't necessarily go in every day and trade. You get it? It's not necessarily, I'm going to go to work today. It's hard to do that. You have to be patient. Third, you have to keep the trade size small, right? Well, that's really the number one lesson I learned. This is why I had to stop trading the way I made all that money. If your first trade is not small, you got no chance, right? You'll win, and then lose it all. So that's also hard for some people. They want to go in big, right? If you want to trade this way, you have to start small. Fourth, and this is a tough one, right? Well, I'll show the picture in a second. Fourth, most of your trades trading this way will win almost immediately. Same day, right? So if you wait for fair value, and you wait for something to be 50% off or way far away from what you determine fair value is, and you take that trade, you're probably going to win, right? And then you're going to do it again, and you're probably going to win. And you'll do it again, you're probably going to win. This is very, very dangerous. And here's a picture of what I'm talking about. This was back in 2010. This was actually just page 2 on my trade list, all right? So I didn't scroll back too far. But I thought 2010 was appropriate because I keep talking about that year. Here's an example from the robots that I'm talking about, and here's a trade list. The first line is when it entered, second line is when it exited, right? So 1223 in, 1223 out, same day winner. 1223 again, enter, exit, winner, right? 1228, winner, winner, same day, same day, same day, same day, same day. You see that? That's what I'm talking about. It's very, very dangerous because if you trade this way, you're going to go through this massive winning streak and you're going to think, oh, well, it wins all the time. Let's double my trade size. Let's triple my trade size, right? Do not be fooled. If you're seriously considering trading this way, the tough times are coming. Be humble, be patient, trade small. If you do that, this is a real thing. If you don't, if you get fooled by the winning streaks, you're going to lose all your money, okay? Fifth thing to consider when you're doing the system is determine your tolerance point, meaning your max drawdown. If you're trading this way and you want to win all of your projects, your trading projects, 100%, you can make it so the max drawdown is pretty light historically, right? It's pretty light. No big deal. You're not going to make that much money. You'll make a little bit of money, right? And maybe that's all you need to do, right? You're not going to double, triple, quadruple your account. But if you want to make your drawdown reasonable, because that's what you can take, perfectly fine. You can have an account that's growing slowly, that's winning all of its trades. That's a pretty enjoyable experience. But ultimately, you'd have to decide. You know, Warren Buffett says, and all these managers, hedge fund managers says, a 50% drawdown is what you need to take. That's way beyond what most people can take. But if it's not, you can make some nice money if you're willing to risk 50% of your account. Now, here's the thing. When you say risk 50% of your account, you're not actually risking that money as far as banking losses. You're just going to see your account go down that low, right? This assumes that that trade works out in the end. See what I'm saying? So when you see a 50% loss, you're not closing out. Your account actually doesn't drop by that much. It goes down that much, and then it recovers. So that's the difference. When you're trading with stop losses, a 50% drawdown means you've booked that loss. You have 50% less money. When you trade a 100% system, you just see it lose that money, but then you hold on and try to win it back, all right? So this is the number one thing to consider. You do your research, you find out what the max drawdown is, and then you be honest with yourself and say, can I take this? Can I not take it, right? Now, real quick, I want to show you a picture. I've been talking project. Easy for me just to show you a picture. Here's what I mean before we move on to the next slide. You can see that this is a fair value robot trading back to fair value. Determine the fair value is somewhere up high on the screen. Enters the first trade and immediately goes against. Enters the next trade, and the combination of that win plus that loss meets the profit target, and you're done for the day. That's a profitable trade. It's not every trade profitable. It's a profitable project. And then you can see this one, the first trade worked fine, and you're out. Okay, is everybody clear on that? I hope. I'll check questions here a little bit at the end. Okay, so well, let's talk about the advantages. All right, maybe you're getting the picture, and we're going to get to the spreadsheet, which I'll have to open up for you, by the way. An advantages of a 100% winning system means you never lose, right? That's an advantage. And nothing wins like a 100% system, which sounds a little sounds obvious, but here's what I mean by nothing wins. I mean, the winning streaks are like nothing else on a 100% system. That's a better way to put that, right? And basically the wins are guaranteed, right? If you trade a back to fair value or whatever you trade, but you're with the mentality of 100%, the wins are guaranteed. I mean, you're going to go through a winning streak, right? There's nothing I've tested that's ever not had a winning streak, right? It's going to have a winning streak. It's guaranteed. But guess what? The drawdowns are guaranteed too. That's why I put that in red, right? But nothing goes through winning streaks like a 100% system. There is no stop loss system that will ever win like a 100% system does. Got it? So that's an advantage. The ability to possibly compound gains, right? If you go through these huge winning streaks, guess what? You can compound your money as your profits go up, and guess what? They will. I mean, it's a guarantee. These systems win like crazy. As profits go up, you could consider putting more money in your account or betting bigger. If your account goes up 20%, you bet 20% bigger, right? The drawdown percentage still remains the same. Something you could do. You have the ability to move profits with their advantage of 100% system, right? As profits go up, and they will, right? You're going to win. You're going to make money. You can just take these profits out, right? This is like a gambling, right? It's like going to Vegas, only the edge is with you and not with the house. You go to Vegas, you win in blackjack, you take that money off the table and play with the house's money, whatever you want to call it, right? You trade a 100% system, you go through a winning streak, take the money out, put it somewhere else, start a new trading account, go take yourself on vacation, pay some bills, just get it out of there and act like, oh, that was free money. And then you go back to work with the same drawdown percentage, you go back to work, right? Can't really, I mean, you can do that with a stop loss system, but not nearly as well because you don't have the winning streak. So that's an advantage. There's a psychological advantage and a psychological confidence that comes from knowing you're going to win, right? Every time you take a trade, it's like, oh, goody, I'm going to win. You trade with stop losses, especially in the past week, week and a half, 2 weeks. Oh, boy, right? It's going to hit my stop loss. And it starts moving to your stop loss. You're like, oh, crap, another one. And it's awful. I understand it feels that way. But when you're trading 100% project winning system, it's like, oh, it goes down, no big deal. Can't wait to take another trade and get out of this, right? It's a total different psychology, and it has to agree with you. You have to like it, but it might make you really excited, or it might scare you to death. And you can take trades early. Here's the difference. You take a trade early or mess with your stop losses in a stop loss system like the Hornet, you'll screw everything up. You decide to screw around with one trade, and it might ruin your account. It might set you up for a drawdown that was never historically documented. You screw around with one trade and screw around badly, you're finished. You screw around with a 100% winning system, it's no big deal, right? Again, every project we want to be profitable, okay? If you take it out early, if you're supposed to make $100 and you take it out for 50, it's okay. It's not a big deal. It won't really skew because you're trying to win every trade anyway, right? Maybe you'll make a little less in the long run, but it's not really immaterial. It's kind of immaterial. Or if you're in a trouble and you're trying to get back, the robots I have never stop till you're in profit. As a robot trader of this system, you could, as a human, come in and say, listen, break even's good enough. Let's get started on the next project. You can get involved in a 100% project system. You cannot get involved with the stop loss system and do well. You just can't do it, right? So those are a ton of advantages. What are some disadvantages? Well, the biggest disadvantage of trading this way, let's be honest, let's speak the truth between us. You never really know, right? I can document, we can go in small, we can be extremely prudent, we can never screw around and bet too big, we can wait patiently, and you never really know. You can research every shred of data that exists, because that's what I do, and you still never know. The next trade you take might take your whole account, right? What if it goes past the historical drawdown? Can it do that? Yes, it can. Is it likely? No, it's not. But you never know. Now, if you're trading with stop losses, you also have gauged historical drawdown. Can trading with stop losses, can the drawdown be worse? Of course it can. So really, it's not the same, but it's something you need to keep in mind. You never really know. And you're trading without stop losses, that would be a long, arduous process of just watching your account dwindle down to nothing, right? We can take steps, and would I trust it? Sure I would, but I'm just telling you. You can be in a series of trades for one time. You can wake up every day and see a negative balance in your account for a month, 2 months. I think the maximum I've seen so far is 3 months. But you might have 3 months where your account is down. Now, you'll be winning trades in the meantime, right, because you'll have a portfolio, but you might see a losing balance for a long time. Can you handle that? Can you stomach that? I mean, it's not fun, right? Here's a disadvantage. If you bet too big, you'll lose everything. That's kind of a problem. So you have to be a disciplined person. You don't get trades all the time, so you might get itchy, right? Because you have to wait for specific circumstances. And those are huge, huge disadvantages, all right? So let me open up now. This is a trading back to fair value. This is modeled almost exactly after the way we traded in 2010. Got it? The ones with the box around them are the ones that I've not only tested, but are active in the portfolio, ones that I would consider trading next week, tomorrow, whatever, okay? I've looked at the pound Swiss. I didn't put the data in. I've looked at the pound yen. It's profitable, but the drawdowns on the pound yen are enormous. So I'd have to work more on that to get the drawdowns down. Of course, it's profitable in the end, and it wins 100% of the time, but it's a drawdown that I don't think plays well with others. So I don't use the pound yen. So we're looking at 1, 2, 3, 4, 5, 6, 7, 8 guys in one little portfolio, or girls. Here's the deal. There's your profit. Now, I'm not going to say on a hypothetical blank account because it's all liquid. You want to start with a hypothetical $10,000 account with these hypothetical testing results? Fine. Let's look at that. Look at the winning months. 90.4% of your winning month or your months are profitable. 90%. Look at these winning streaks, right? That is a 10-month winning streak, right? That's a 10-month winning streak. That's an 8-month winning streak. That's a 6-month winning streak. Do you see? You could go almost a whole year and be profitable every single month. How does that treat you? Interesting, isn't it? Can you see now how I went 3 straight months and made all that money? Betting wrongly, of course, but can you see? I mean, this is just basic robots. This is no tinkering for me. This is basic philosophy, basic robot trading, no humans involved. Now, here's a big one. There's a drawdown. So you're trading a hypothetical 10K portfolio. Is that too much? Well, guess what? The actual drawdown that you would see in your portfolio is bigger than this. This is a month-end number. So you can add probably 50% to that. So if that's 2,000, let's call it 3,000. So, okay, let's say, and I'm actually going to get this number down to the penny, right? I don't have it yet for this portfolio because you have to lay out cells and you have to look through about 1,000 cells. Well, make that about 5,000 cells. But I'm going to do that. I'm going to get it to the penny. But let's say it's 3,000. All right, so what size account would you trade now? 10,000? Less? All right, let's move on. Win, win, win. There's a little tiny month, all right? There's a big one, but not quite as big. Here's the worst period right here. That's a 3-month period. Remember when I said a 3-month drawdown? Look at your account for 3 months and see nothing. There you go. How much is that? Again, $1,967, about 2,000. So what does that mean? About a $3,000, $3,200, $3,300 drawdown in real time, right? Interesting, huh? And then let's look at the drawdown. There's a 1,600. And then, oh, look at this winning streak. Good grief. That is a 22-month winning streak. That's a 2-year winning streak. Anyway, now, keep that in mind. And one more thing I'm going to go over, and then I'll open it up for questions. I'm sure we're almost at the end of our time. Keep in mind 2 things. Number 1, when you see this drawdown, you never book that loss. Not in this system. So at the end of 30 days, you would look down and your portfolio would have lost that much that month, but you can see it immediately gets to work on getting them all back. And within a month or a couple months or whatever, those positions all, by the very next month, you've closed out profitable, right? And by 4 months later, 1, 2, 3, by 4 months later, you've started making money again in a big way. So when you see this on a stop loss spreadsheet, you've lost that money. It's gone. When you see it on a 100% spreadsheet, you haven't booked it yet, right? So keep that in mind. All right, let's go back to the numbers. Well, if you say, well, $128 on a $10,000 account per month, right, that's not that great, right? $128 divided by our 10,000, that's times 100, right? That's 1.28% a month. Times 12, it's 15% a year. Well, you can laugh at that if you want, but that would make you one of the best traders in the entire world, right? However, this is the question, traders. If you had a $3,000 drawdown, what account would you trade? Would you go to a $5,000 account? Would you set aside $5,000 and go for it, right? If you did, right, now you're making 30% a year or potentially more if you go through a winning streak and you don't hit this drawdown, right? Do you see? That's the kind of thing I want you thinking about. I'll be able to compute. I'm going to put all these trades together on a daily basis, and I'm going to add them up by hand and find out what the biggest drawdown is historically. And then I'm going to base my account size on that, all right? But that's the kind of analysis you have to go through, right? Or you could put this, use a $10,000 account, never really sweat it, and just crank out these profits every month, right? Those are the things you have to think about, all right? And in addition, I'm also working on another portfolio, which is down below it, and I'll show that later date, which uses a different methodology to get in, and that's very interesting too. But this is the fair value, something you check fair value, you wait for it to drop if it's a long trade, and you buy back in, all right? And I'm going to go through one more slide, and then we'll move on. Latest updates. All right, let's talk about this for 1 second, and then I'll take questions. Obviously, when this is all done, lifetime members will get all of it, right, if you want it. So if you're a lifetime member, that's fine. I've got a nice group of lifetime members. I'm very happy with that. I can probably take a few more, a handful more, but I'm just going to let you know that there may come a time where I just don't take any more lifetime members. I'm just letting you know I don't want to get too big when it comes to lifetime members because I want to take care of them, right? So obviously if you're a lifetime member, you'll get all this if you want it. But if you're not a lifetime member, because it's expensive, it's $3,000, right? It's expensive, I get it. Would anyone be interested in an inexpensive course, $100-ish, right? And I would go over the basics of this and maybe, give you some settings that you could trade on your own or maybe even, offer you a robot or something, right? I did a $99 robot at Houston to get people started, and that worked really well. Something along those lines. Again, I'm totally talking out loud, and I'll probably regret even bringing it up. But if you're interested in that, go ahead and email me. I'd love to do a course on it and make it so that, people can get involved in this. It won't be obviously in a massive portfolio because that's what the lifetime members get. but I'd love to get, if you're really interested in it, I'd love to get it into your hands for something cheaper. So there, marketing 101. Sorry, I don't mean to be a marketer. I'm just trying to, talk to you, right? So if you're interested, talk to me. Now, for me, I'm trading the specialist portfolio. Of course, it's gone through some losses. Big diversified, I'm still doing that. Probably always would do that. And I'm trading the breakout. My breakout's doing great because I skipped Brexit. And I luckily actually skipped a trade right before Brexit because I turned it off right before. I forget the reason why I turned it off because I never turn my robots off. But anyway, I missed some losers and my breakout portfolio is in a winning trade now. So I'm doing great in that. But it is just a small account, so who cares? I'm waiting for a trade on my new trend following robot. I'll give you an update on that. VPS might be coming soon to an Oanda near me. I'm excited about using VPS. And I'm working on getting the 100% system programmed. All right, this isn't even available yet. This is all still in the prototype phases. But when it's available, I'll let you know. All right, so enough of me talking. Let's put my contact information up. Email me with questions, comments, and let's take some questions and get out of here. Let me scroll back now because I've been chatterboxing for too long. I apologize, but I love this subject. Let me scroll back, scroll back, scroll back. I don't want to miss anyone. All right. Oh, wait. Douglas is talking about the circle of life. I think I missed the beginning, Douglas. All right. Okay, here we go. Questions. 7th hour, the 7th day of the 7th month. Oh, that's right. Excellent. Pump it up a little bit more. Oh, that means volume. Pump it up more. Okay. Hopefully I did that. How's the new Hornet coming? Wes, I just emailed Wes, by the way, Talon. It's almost, he said it'd be done by today or tomorrow. He wants to get this right. I'm done. I'm done screwing around and having you guys not be able to trade this, you FXCM people. So he's taking his time and getting it done. But actually, I just emailed him today. So I'm hoping 24 hours. I'm kind of at his mercy right now, but I'm hoping that'll be done soon. I apologize. If I had known FXCM was going to be this tough, I wouldn't have released it to FXCM. I would have waited and just gotten it all done by myself. So again, sorry about that, but we'll get it. You're going viral. Thanks, Tal. Send email link. I'll find it. Okay. Circle of life. As long as, okay. We will get lots of rebates. Douglas talked about rebates. If you trade the 100% system, you get rebates. Absolutely, because you'd be trading a lot. Yeah, rebates would be great with that system. Yes. I'll have to go watch a recording. He had to go. Late getting here, Craig. Sorry. The recording will be on the YouTube channel and on my blog, so check that out. While waiting for the comeback to fair value, I could save capital in a checking account and then add to it when it starts to come back. Would that be prudent? Yes, Sean, great question. If you believe in the system and believe in the research, and I would not ever recommend or even allow you, like I'm your authority figure, I would not allow you to trade until you understood what was going on and you understood the research and the historical testing, right? Once you understood all that and you went through a drawdown, I would be, again, with my own money, and your money is more important to me than my money, right? I get more worried about what other people do than my own. I can get out of my own trouble. I want other people to do well, right? If you believe in the research and it goes bad, I would consider even adding money to my account knowing it's going to come back. And of course, I don't know it's going to come back, but I believe it would come back because of my research. So I'd be willing to, yes, put the money aside and add more. But you would want to do an account size that you would never have to add, never have to do that. But would I be willing to do that with the research? Yes, I would. But again, that's up to you. Where is the link for the video? Doriel says, where is the link for the video, please? Okay, here's the easiest way, right? Go to tfl365.com/Scott. Okay, that's my blog. It's got everything on there. I've been writing and posting since 2013. Underneath the most recent post will be the YouTube channel if you want to subscribe to that, or just check the blog every week. That's the easiest way to go, all right? Next question. Scott, I can see it working better in shares. Sean says, I can see it working better in shares than the FX as companies don't go bust, so we all lose our capital. Excellent, Sean, and it would, but it's less money. That's the thing. Because of the leverage in Forex is higher, obviously, we make more money. I did this robot on Apple the other day, and it was amazing, 100%. It was awesome, equity curve, but it was way less money, right? So consider that, right? Consider that. Absolutely would work. It's great to see another desktop as messy as mine. What do you mean my desktop is messy? I'm offended, but not really. No, I'm not offended at all. I know where everything is, so therefore it's not messy. Ha-ha. Richard, just kidding, of course. Richard, what is the initial trade size on a 10K account? These were working just a 1 mini lot, 10,000. Yeah, 1 mini lot. That's what I was starting with, right? Actually, I lied. On some of the fair values, I started with 2 mini lots, and then on the other portfolio, I started with 1. So it's no more than 2 ever. It's 1 or 2. How would you determine fair value? That's something I would put in the course because there's a lot of way to do that. I've talked about the 800 simple moving average. You can use pivot points. You can use other things. But that's something that if you're interested in the course, I would love to go into detail on that. You can do fundamental analysis too. I can do that for stocks very easily. So this is a portfolio of robots with a pre-programmed additional buys or sells. You have no judgment involved, Douglas. Yes, this robot does everything. You literally do nothing for these. It's not a robot that you ever would have to go in, right? Which is pretty cool, right? The robot would do all the rebuying at the right time, and it would get you out when you're finally profitable. Yep, that's pretty cool. How do you determine when a market is stretched out too far and needs a return to fair value? Well, you never know, but there are different ways to do that. And like I said, that's something that I could address possibly in a course. But yeah, there are different ways to do that. Rob Booker, for example, loves pivot points. Doriel, found it. Thank you. Great, Doriel. Does it need optimization? I mentioned it in my blog post. I've done so little testing on this. It's so easy. It just takes a long time because of all the calculations. So I'm testing like 2 variables, right, instead of 6 or 7 for my Hornets. But it takes like 10 minutes of tests. So I will sit for 5 or 6 hours and not run a high quantity of tests. But it just takes a while to run them all because of the fair value calculations and all that. But no, you would never need to optimize. I would build it so that you would never optimize. That's my goal. Sean says, I hope the Boss-Slater, these are Boss-Slater principles. My original system was Boss-Slater principles. So yeah, that's interesting. Sean Frank says, good. Douglas says he loves it. Do you have any robot that works with higher rates gains and many more trades a day? Not yet, but this is opening up a huge can of worms for me, this could lead to a whole bunch of things. I've been so excited these past several days. Douglas, have you finally success in back testing? No, still don't back test in MT4, Douglas, still afraid. All right, we've gone over time. This is exciting. I've gotten some great emails. Email me, that's my name with 1 T. We'll be back next week. Heaven knows what I'll have by next week. I could have a whole bunch more stuff. I'm really excited to be in here as always, and check the YouTube channel, check the blog, check Twitter, and I will see you again very soon. Bye for now.